Welcome to Invested in Climate. Protecting the planet and decarbonizing the global economy is the challenge of our time. We all have a role to play, and the opportunity we face is unprecedented. Invested in Climate aims to help people do more to address climate change through their work, investment, lifestyle, and activism. I'm your host, Jason Rissman. I support a growing community of top climate and ESG leaders as the Chief Experience Officer at NationsWell, and I'm an advisor to the climate practice at IDEO. I'm also an investor and startup advisor, and when it comes to climate action, I know I'll be a lifelong learner, always looking to have more impact. If you like what you hear, give us a good rating on Apple, Spotify, or wherever you found us. Sign up for updates and suggest ideas for future episodes at investedinclimate.com. Follow us on social, subscribe, and spread the word. Thanks for joining.
We funded the largest microgrid company in the world twice. They've said they wouldn't be around if it wasn't for Open Road. And now they've got 200 projects set up across the globe. And so it's really coming in at these critical moments where we like to say we're part lender, part psychologist to these founders because there aren't other options and they're posed with these big cash crunches.
Hey folks, if you're an avid listener, you might know I'm always interested in learning about ways we might improve financial markets for climate ventures. Improving the flow of capital can, of course, be incredibly impactful in helping more climate solutions scale successfully. So I was really excited when I learned about Open Road Impact and the important role they're playing by offering bridge loans to promising companies. Okay, maybe bridge loans don't sound that sexy to you. Think of it this way. If you're an entrepreneur, what could be worse than running out of money? How about running out of money when you already have significant funding lined up, just not yet in hand? The sad truth is that happens all the time. Companies go under because they simply can't keep paying salaries or buying supplies while they wait for financing to arrive. That's the financing gap that Open Road Impact has been addressing for over 10 years. In this conversation with Open Road CEO Caroline Bressan, we talked about her background in impact investing, Open Road's history, how their loans have unlocked 10 times the amount of capital, their climate portfolio, and more. Enjoy. Hello, Caroline. Welcome to Invested in Climate.
Hi, Jason. Thanks so much for having me.
Well, you just told me that you have a New Jersey accent, but you're not from New Jersey. So where are you dialing in from today?
I am dialing in from not so sunny Seattle, Washington.
All right. I don't think you actually have a Jersey accent, but I guess your name should be pronounced with one. We'll remember that.
That's right. A Michigan A might come out here and there. I apologize.
Very good. All right. I'm a fellow Midwesterner. Carolyn, let's learn more about you. Before we dive in and hear about your organization, I'd love to just learn a bit about your background and what you did before taking on the CEO role at Open Road Impact.
Sure. So I'm one of those strange people who has been working in impact investing my entire career. Unsurprisingly, I kind of stumbled into it. I got my undergrad degree in business. And when a lot of my classmates were going to work for prestigious institutions like Bear Stearns, I stumbled across a small nonprofit called Calvert Foundation, now Calvert Impact, right out of college. I felt like I had learned kind of all the problems in the world in my political science classes in college, but didn't have any tools to solve those problems. And I found finance. I went and worked for a microfinance institution in Bolivia and really felt like I wanted to do something different than investment banking right out of college.
Oh, very cool. I didn't realize about the microfinance Bolivia. Probably around the same time I was working microfinance in Nicaragua.
Oh, nice.
Another cool overlap. And I've always been a fan of Calvert since before impact investing was probably even a term. Calvert was leading the way. What's something that you learned at your time at Calvert that has shaped your thinking and probably the work that you've done since then?
I like to call Calvert the grandmother of impact investing in the U.S. because the people that put it together really were visionaries for thinking about what was possible with capital beyond just market returns. So for me, I was right out of college, and that was also right around the same time as the 2007 to 2009 financial crisis. So it was an interesting time, but I really learned about the transformational impact of debt and how to be a lender. It's a really specific mindset, and I think in impact investing and finance more broadly, broadly. There's a lot of focus on VC, but there's a very specific kind of discipline to being a good lender. Sometimes I joke that I'm no fun at parties because we're always thinking about worst case scenarios. But Calvert and the people that I got to work with who've kind of gone on to do really incredible things were people that I looked up to as mentors.
Amazing. Well, really interesting to think about how a mindset of worst case scenarios actually allows you to create some best case outcomes. Let's hear about Open Road Impact. What is Open Road? How did it start? And what's the problem that you're aiming to address?
Open Road's roots are in philanthropy and Burning Man.
What?
So we were the brainchild of our founder, Dr. Lori Michaels, and she was an individual philanthropist that had been making grants on her own for a number of years. She had a friend who she went to Burning Man every year who ran kind of a large corporate foundation and was hearing about how this foundation had funded a women's hospital in Nicaragua and the equipment therein, but they forgot to budget for the excise tax to get all that equipment out of the United States. That equipment sat on a pallet in Atlanta for, I think, 6 months because the foundation's policies were so inflexible. They couldn't figure out where to find another $50K from. Lori said somebody should do something about that, and the foundation had challenged her to do it, and Open Road was born. And over time, we started off funding these one-time unexpected roadblocks, and we saw that it wasn't just that there were funding gaps, there was also a real timing issue. Over time, we developed a goal of making the financial system work better for the people doing the hard work, which we see as kind of mission-driven organizations.
Well, probably just one of many innovative, great things that have been sparked on the play at Burning Man.
Totally.
Very cool. And I'm not sure if that was on the website, but a cool part of the story. Good to know about. So let's go deeper into the financing gaps that you're helping address. And you described one with the original foundation that inspired Lori to start Open Road. But we often hear about the valley of death and the missing middle, where there's a need for significant venture funding to help high growth companies grow. Is that the same kind of gap that you're focusing on?
I would say partially. So we say that we focus on unsticking capital, which is a made-up word that, that we invented. What that means is basically whenever there is a delay that is outside of the entrepreneur's hands, Open Road will see if there's kind of a lending solution that we can come up with to solve it. So we've seen that capital gets stuck in the valley of death. We've bridged a number of Series A deals, but we've also bridged deals all the way upwards of $50 million, where because of certain conditions precedents or investor requirements, the money is just not moving. And so what we mean by capital getting stuck is really capital is committed, especially when multiple investors are involved. The real business of doing deals begins at that point. Our research shows that it takes around 8 months from someone saying, hey, entrepreneur, we think your idea is great, to actually having cash in the bank. And so if you take a step back and think about like, what is that entrepreneur experience? What is that company's experience during those 8 months, right? Cash is dwindling often. Management teams are just trying to keep together kind of their high-performing teams. And then when the money comes in, they're expected to grow 100% overnight after being in a starvation cycle for the past 6 months. So Open Road's loan about 80% of the time covers operating expenses, so literally keeping the lights on. And instead of laying people off, about 90% of the time, the companies are growing instead. And so thinking about the timeline that we have to mitigate climate change, these 6 to 12 month delays really add up over time. And that's where Open Road can really play a role to get things moving faster.
Really interesting. Had never heard of this sort of financing, but makes a lot of sense. And seemingly, I would guess there's a lot of organizations around the world that need it.
Yeah, definitely.
I saw that nearly 60% of your investments are in Sub-Saharan Africa. Tell us a bit about how your geographic reach and focus is determined and why you have such a strong presence in Africa.
Sure. So my dad is an economist, which is both good and bad, but I like to think of things.
You would say compared to what, right?
Fair, in terms of the efficiency of systems. And so where would we think that capital is getting stuck? Ostensibly in developing economies, their financial systems aren't as inefficient as someplace like the US or Europe. Therefore, they would need more bridge financing. That was kind of an idea that we had, but it has proven to be true. And I don't know if you've kind of followed what's happened in Africa venture capital since 2023, but when the financial markets kind of took a hit, African venture capital was reduced by half. enough foreign investors pulled out, and there just weren't enough local investors to keep that system thriving and growing. So those are the kind of markets where we see capital getting stuck. But it's also really a word of mouth thing. So I sometimes say that my least favorite thing to hear from an entrepreneur is, I wish I'd known about you 6 months ago. Open Road's kind of like a secret that gets out in a given network when somebody has a positive experience with us. We helped out a few investors and entrepreneurs in East Africa. There wasn't anyone else providing our kind of capital, and these kind of unexpected crunches keep happening. So referrals naturally started to trickle in. But we also have about 20% of our portfolios in the US. The gaps are everywhere, even though sometimes in the US there are more people to step up and write a check quickly when the cash starts to get really tight.
Caroline, Open Road covers a lot of ground, both geographically, as you just described, but also in funding a wide range of spaces. How do you find and select the portfolio companies, and what does your due diligence process look like?
We work a lot with long-term investors. Sometimes I like to say that in impact investing or climate finance, it's really like these companies are running a relay race and they're passing the baton off to investor. And because the market is inefficient, the track is kind of littered with batons. So Open Road just kind of pops that baton up in the air with our bridge loan to give time for another investor to catch it and keep running. We form deep relationships with investors who can kind of see in advance that there might be a problem here. This portfolio company that we're working with is trying to close their Series B, but we don't think they're going to have the cash to make it. So we build this high quality referral network. Due to the nature of our funding, we also have to be fast. And so our due diligence process is around 4 to 6 weeks. And we really focus on the financial profile of the company, the transaction itself, and the impact. We do only fund companies where impact is at the forefront of their work. That does sort out a number of deals that come our way. And then from a transaction perspective, we're fairly different from other lenders in that we're really focused on understanding that incoming cash flow. So how far along are they in the transaction? What's the reputation of the investors involved, et cetera?
Caroline, you mentioned impact, and we'll get into the climate impact because I know that's one thing that you care about and is a main focus of the portfolio. But thinking large scale about the organization, which has been around now for over 10 years, give us a sense of what sort of impact you've been able to have in terms of entrepreneurs reached or other types of metrics that you're tracking.
We've got our big high level numbers. So our $80 million of loans has kept over $800 million of impact on track. What that means is for every dollar that we've lent out, we've kept $10 of follow-on financing on track. Because we're a short-term debt fund, we've also been able to recycle our investor 3 times now, kind of making a really leveraged model for people putting funding with us. But it's the entrepreneur stories that are really the depth of our impact. So we've funded the largest microgrid company in the world twice. They've said they wouldn't be around if it wasn't for Open Road. And now they've got 200 projects set up across the globe. And so it's really coming in at these critical moments where we like to say we're part lender, part psychologist to these founders because there aren't other options and they're posed with these big cash crunches. Our research shows around half of the loans we make, they didn't have any alternative option. So we really look at Open Road's additionality as the main thing that we're proud of to shout from the rooftops.
I'd love to zoom out for a second and understand the broader need here. $80 million, amazing, congratulations. That makes a huge difference for the organizations that you're working with. And 800, even bigger, but still in the scheme of things, particularly for something like the climate transition and the trillions of dollars that are needed to be invested. Give us a sense of how big of a need there is for this sort of bridge funding beyond what that you're currently able to offer. And are you aware of or helping catalyze any other types of bridge capital so that more folks get involved in serving this need?
Open Road has always been driven by a hypothesis-based approach. So we started off just on a family office balance sheet, making a couple of bridge loans here and there. In 2020, we launched our first external fund because we saw that there was more need than kind of we could take on ourselves. We are launching our next iteration to scale up further. When you zoom out and look at the scope of the problem, looking at climate policy initiatives, they said around 1.27 trillion of climate finance went out in 2023. Of that, around $630 billion was coming from government funders. Our data shows so far that government funders from approval to disbursement can take as long as 21 months. So again, you see these big climate commitments, but given the timeline we're on, actually translating it to cash in hand is definitely kind of an open question. So we have kind of proactively developed relationships with these development finance institutions who often bring deals to us. We have a couple of investment officers that know that the red tape involved in their process will lead to an issue. And so they've started bringing us in earlier in the deal. And then we'll also do kind of co-loans with other impact investing lenders out there when the deal sizes are kind of beyond what we can take on ourselves. But it isn't a very well studied problem. And it's one that Open Road's kind of next iteration will be as a nonprofit format. And we're kind of planning to take the lead on building out more thought leadership on defining the scope of the problem and coming up with solutions beyond bridge financing, but also are there ways to get people to change their policies to get capital moving faster as well.
Let's dive deeper into that in terms of your organizing structure or your formats. As you're currently operating as, is it a revolving loan fund? And if so, tell us about the repayment rate that you've been able to achieve and why you're shifting to a new structure.
There is no bridge fund model for impact that we are looking at and replicating. So I often tell my team we are building the bike while we ride it. Open Road is a blended finance investment model. So we raise philanthropy to cover our operating expenses and first loss. And one of the big lessons learned from our first 5-year fund was that there's a real trade-off between impact and risk. And so if you think about this entrepreneurs trying to get a deal to come together, there's always investors that kind of say yes, but then getting the paperwork and tracking them down, people fall out sometimes. The longer that Open Road waits to come in to bridge a deal, the more certain it is that we'll get repaid. It also means the less impact we have because these entrepreneurs are living hand to mouth for a longer period of time. We've decided that we're putting impact first in our model. For our next iteration, instead of being a for-profit, which we were for our first fund, we're transitioning into a nonprofit model. Maybe one more thing to say about that. I'm trying to say this unabashedly now. There is a whole lot of ego sometimes involved in investing, but I'll shout it out here. We're targeting a 10% loss rate. So 1 in 10 of our deals are going to go bad because we're just doing so many deals and the world is unpredictable. But when we think about it, 9 of our deals are keeping these important climate and inequality companies growing and creating impact.
And in the case that they do default or the deal goes bad, is it simply that the funding that they thought was lined up doesn't actually come through, or just that the operations didn't materialize or didn't continue in a way that allowed them to be sustainable?
We try our best to differentiate between companies that are in a dire workout situation versus companies that are having a hard time getting financing to come together, but have a very promising team, et cetera. So the deals that we have lost money on have most frequently been because investors don't come through. So 2023 in particular, I like to say that's the year that investors stopped doing what they said they were going to do. We have a couple of examples to show that.
I'm sure. Well, Caroline, of course, I was interested in this conversation largely because of the implications of your work on climate. Give us a sense of how much of your lending has gone into energy or ag or other climate-related companies, and how much climate opportunity are you seeing?
About half of our loans have gone towards climate-related investments, 30% towards renewable energy, and another probably 15 to 20 towards agriculture. We've also done a few plastics recycling deals, circular economy deals, but the renewable energy transition, particularly in these emerging economies, I think is a really important place for us to focus our work.
Let's go deeper into that. I think for a lot of listeners, sounds good, but what does it actually mean to support a probably somewhat small renewable energy company in a developing country?
We have supported the first solar mini grid projects in Burundi, Lesotho, and the DRC. So these are countries that are really frontier markets. Over 500 million people in Africa lack access to electricity. If you think about the future of CO2 emissions, we need to make sure that when these people do get access to electricity, that energy is green. Going back to my earlier points around where markets are inefficient, where they're not working very well, these frontier markets are a really important place. If you're building a solar mini grid system in one of these rural areas, you have to form an agreement with the government. The government is not like the federal government of DC or the state of California. They've never negotiated a benefit sharing agreement with an electricity company before. Those things take a lot of time. Then lining up all the capital to get the project together also takes a lot of time. And all of a sudden, it's 15 months later, and this project that everybody wants to work out has no cash to move forward without a bridge loan.
It's interesting doing so many deals across one sort of micro niche of microgrids probably gives you some expertise into the operations and dynamics and financing of those businesses. And it sounds like what's particular about that business is the government funding that takes a while.
Well, the government partnership, the government will get a certain percentage of payments that people are making towards the electricity, as will the company. And again, there's just not a great baseline for what that should be, and often multiple people that they're trying to convince.
Yeah. And as those microgrid companies grow, give us a sense of the impact and just how important in the, say, rural electrification space are microgrids and this element of financing.
People are still trying to figure out if there are ways to connect these renewable solutions to the grid in some of these more remote areas. But in a lot of places, it's never going to make sense to spend the money to connect the grid. And so these microgrids are a really great solution of usually 1 megawatt or less, sometimes as little as 300 kilowatts, that can do things like provide electricity to a rural health clinic, where if there's no electricity in the area, this company that we funded in Lesotho, their microgrids were sustaining these health clinics for maternal health. So women would walk to the health clinics a week before their due date and stay there so that they had access to electricity for their high-risk birth. So you think about it, like this small amount of energy can really be transformational for even health outcomes of these rural populations.
What else in the energy space? It sounds like microgrids are one, but what other types of businesses have you supported?
So this is the cool thing about Open Road, because like I say, we're an efficiency play. We really get to dabble in a lot of different kinds of business models. We also supported a hydrogen fuel cell company that focuses on commercial transportation. So their system offered around 300 kilowatts of energy storage that you could attach to a truck, a maritime vessel, a plane, and use that instead of traditional energy. I think about 14% of global greenhouse gas emissions come from commercial transportation. Electric vehicles just aren't going to be able to be powerful enough to replace the commercial vehicles as is. So it was a really cool deep dive into like the hydrogen fuel cell technology. And they had a Series A lined up that was taking a long time to come together. And so we gave them a bridge loan to get them there and keep their very highly talented, highly technical team together during that time.
I think that you mentioned about a quarter of your loans are here in the US. Are any of those in the energy space?
You know, honestly, I don't think so. I think most of our US loans are ed tech, or we did do a couple agriculture loans on the regenerative side, but not energy as much.
Let's talk about the ag side. Is that a transition finance opportunity? It's someone that needs to change their farming practices to become more sustainable, or what are you enabling?
In that case, we were really helping transition to more organic practices. So the investment up front to that, and we provided some of the working capital before some longer term debt came in.
And you also mentioned circular economy and plastics and recycling. Tell us about some of those businesses.
I really love this company. We've supported them, I think, 3 times at this point. They are the largest recycling of plastics company in Africa, and they use an informal waste picker system where they provide dignified incomes to waste pickers to collect the plastics that they then bring to their processing facilities. And these guys have investments from some big corporate players like Dow. But again, at each step up moment where they're raising capital, things just take so much longer than they do if you're sitting on Sand Hill Road and people can all come together and send a check in 2 weeks. I kind of thought when we started this that we would be making one-time loans and then these companies would grow exponentially without help forevermore. And we're finding again and again that at each step-up moment of growth, there's this kind of friction that causes companies to have to take their foot off the gas.
My sense is that your deal flow is really coming from investors. Is that right? Rather than entrepreneurs themselves hearing about you and thinking to apply?
Yeah, I'd say around 2/3 of our deals come from investors or ecosystem players, and a third comes from both entrepreneur referrals and just direct outreach.
Okay, well, we've talked about regenerative ag, we've talked about renewable energy, we've talked about circular and plastics. Any other climate type companies that either you're currently supporting or that you're eager to?
Yeah. So where we see our investments really growing as we launch our kind of second iteration next year, definitely doubling down on kind of the project finance renewable energy space in Africa. But the second big bucket is nature-based solutions. We did our first mangrove preservation deal this past year in Sierra Leone. So kind of the largest swath of mangroves, a place called the Turtle Islands, which if you Google, please stop what you're doing right now and Google Turtle Islands because it is wild. It is so beautiful. But as some of you may know, around 25% of mangrove forests have been lost in the past decade due to overfishing and excess harvesting of wood to use for fuel. This company, they are trying to protect the mangroves by training the local communities to use alternative sources of fuel, training them on the importance of biodiversity, et cetera. The interesting part comes from to what end? How do they fund this, right? And they're planning to fund it via the voluntary carbon credit market. To do so, they have had to come up with, again, this is where stuff happens in the weeds. There were no legal documents structured that the councils of these committed investors had access to. And so to make this deal happen, it took an additional 8 months of time just to get everybody on the same page about what the appropriate legal documentation would be for funding a project like this over time. So Open Road came in with $1 million loan to keep this project going. And again, you think about these people are working with local communities and trying to explain to them why they shouldn't be chopping down mangroves. That's what's happening at its base form. If you do that for 3 months and then disappear because you don't have cash in your bank account, there's no trust built in the community. The continuity of showing up every week and saying that this organization is really here to help your community thrive and help mangroves thrive is critically important to the success and scale of the impact. So yeah, we feel really good about that loan. And we see where our financial markets not working as efficiently as they could be. Nature-based solutions is quite nascent on a number of fronts. And so we think there's going to be a lot of capital to unstick in the coming years.
Any other nature-based solutions aside from the mangroves that you're looking at?
We have only done this one deal so far, but we're kind of in the exploratory phase of building out a full portfolio around it.
Fantastic. And Caroline, you mentioned that you're working on a new fund. Tell us about that.
Yeah. Back to building the bike while we ride it. I mentioned we're incorporating Open Road Impact, a nonprofit loan fund launching in 2025. Similar to maybe an entrepreneur, we realized that the closed-end debt fund is not the best structure to continue scaling our impact. And so what's really exciting about this is that it is an evergreen model that we can continue to raise money into to help us grow and keep making these loans in the market. Our big question is where else is capital getting stuck? So we look at the US and some of the big IRA, GGRF money that's coming in. Will that money be allocated efficiently? Government contracts take time. We see a lot of potential in bridging to government receivables, as well as bridging to contracts for companies, and then in project finance and nature-based solutions.
Great. And who is your ideal investor for that next fund?
We kind of are impact first. Our returns offered are, well, depends on where interest rates sit when this airs, but currently below market. So our target investors are family offices and family foundations, high net worth investors that really want to carve out a portion of their portfolio to put impact first.
Caroline, I think one of the most interesting parts of your model is it really elevates a flaw in the financing system for innovative climate solutions as well as other types of impact ventures. I'm curious, what other flaws have you been seeing that need to be addressed in finance, particularly when it comes to climate innovation?
You have just given me a soapbox, Jason. Beware.
It's all yours.
One of the things that we've seen in the past 18 months is a number of socially oriented companies failing. That's to be expected, especially the VC-backed ones. There's a 30% success rate at best. But I do think there needs to be a collective reckoning around how you fail with impact, especially because the consequences of some of these companies failing have negative impacts on communities and potentially the climate. I do think there needs to be more coordination around what happens if a company doesn't work out. And again, how can we kind of efficiently sell off some of those assets so that if there was ongoing agreements with local governments, et cetera, other players can step in and keep some of those projects going.
Well, wishing you the best of luck with that upcoming fund. Looking ahead to 2025, any other big milestones or goals for the upcoming year?
Hopefully we will hit $100 million dispersed. That'll be a big marker for us on the loan side. And then getting to our first close of the second fund will be our other big milestone.
How does one celebrate $100 million of loans dispersed?
Oh, man. Usually we get things from our borrowers as we funded a sustainable tea company. That doesn't sound like enough fun. So maybe we'll need to fund some sort of sustainable alcohol company to give that to the team.
Ice cream, or go out for ice cream.
Sure. Yeah.
Caroline, thank you so much for your time today. Wishing you all the best of luck.
Thanks so much for your time, Jason.
Thanks for joining us for this episode of Invested in Climate. Please remember to rate us on Apple, Spotify, or Google. Find show notes, sign up for updates, get in touch, and visualize your climate action at investedinclimate.com. This podcast is for informational and entertainment purposes only and does not constitute financial, accounting, or legal advice. Thanks again.